Very good afternoon to you, Ken. Looking at the market, a rather slow start to the week. We're looking at activity and turnover only touching 155 million in today's trading session, really when compared to what we saw last week.
Yes, that's okay. You could say it was expected. Maybe it was the Monday effect. But I think also looking at investor sentiment, a lot of investors are becoming a bit wary now of prices. We saw the rallies last week in East Africa breweries. It hit a high of about 240. Today we saw BAT hit a high of about 450 shillings and stagnated about that level. There was actually a supply on the board, which is very rare for this counter, which is very liquid, which shows that basically investors are becoming a bit wary of the prices and are taking a step back to watch the market. But I think also a lot of investors sat out today. Probably if they're back in the market during the course of the week, we should see activity pick up a bit.
Now, two stocks which were quite active in last week's trading session being KCB and East African breweries, quite active in last week's trading session. What do you make of this week? Could we see the kind of performance coming through into this week as well?
Yes, I think probably we'll see the same performance on KCB. Today there was demand at 28 shillings. 28 has always been, has actually been the resistance level for the past about 4 weeks. What we've seen is every time KCB touches 28, sellers come into the market and take profits, and the price comes back down to about 27 shillings. But I expect it's been trying to break that resistance level for 2 or 3 times over the past month. So I think this time it will actually break through because demand at 28 is still holding, and we may see actually it power up above 28.50.
Now, the repo rate has continued to edge upwards, looking at the 7-day now at 9.86 and the 14-day at 10.10. Is this the kind of trend that we are looking for going forward?
I think going forward, what will happen is what we've seen now is that the repo rates have the spread between the repo rates and the prime rates T-bills has become thinner, and the 14-day repo at 10.1 is almost at the same level as the 182-day and the 364-day T-bill. So with these, looking at these levels, we may see interest start to come back to the treasury bills, and hopefully this will put a bit of downward pressure as the maturities coming from the repo rates go into the treasury bills.
Looking at the Kenyan shilling, pretty stable in today's trading session, sitting at 85 shillings against the dollar. We did have the central bank coming into the market, mopping up about $82.4 million in the session. Now, looking at that whole scenario, could you say that the central bank still has enough muscle to continue protecting the shilling?
Yes, Forex covers as high as it's ever been. And I think they have been aggressively been protecting the shilling. But also the question arises of how sustainable this is, because this has been done through mostly through the term auction deposits. That's the 7, 14 and 28-day repo, which is all short-term borrowing. And also the borrowing has also been actually to fund expenditure. As you've noticed, in Kenya we've had a bit of civil unrest, strikes from the doctors and the teachers. So a lot of this borrowing has also been going towards funding this expenditure, towards paying their salaries. So I think the governor had mentioned it about a week ago that it was a big worrying on how sustainable Kenya's domestic debt was. It's quite high. I think as at the end of September, if you'd consider treasury bonds, T-bills and the government overdraft, we were almost at a trillion shillings. That's as high as we've ever been. I think we're at 914 billion. And that is only as we enter into the second quarter of the financial year. We still have 2 more quarters to go. And the domestic borrowing target, we're still far from hitting it. We're still at about 32 billion if you take out the government overdraft. So with 2 more quarters to go, it is a bit worrying on where the amount that the government is going to borrow from the domestic borrowing, and also with the pressure coming in from civil servants. And there's also the infrastructure spend that's planned actually for the remaining part of this year. So I think we'll actually have to find a more sustainable way to protect the shilling and also to fund this current expenditure we're seeing.
Well, thanks for joining us, Ken Minjire, Fixed Income and Money Markets Analyst at Stanbic Investments.